Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll be discussing an advanced problem which is related to change in method of depreciation. So when we speak about change in method of depreciation, we ideally know that there is one specific method that is being followed and the same is supposed to be changed after a couple of years. The reason we also understand whether there is a profit or loss situation by this change in depreciation method. So earlier if you're using SLM method and now that we're changing it to WDV method, so whether there is any difference that we can observe. So the analysis part we have already done that. Now we'll be understanding an advanced problem related to this. I'll be jotting down an illustration here which you can use for your reference and further go ahead with the understanding of this specific concept. So let's go ahead and figure out this illustration. By the time in the meanwhile you can further go ahead and list down this problem in your notebooks and we can start solving this together. So let's figure it out. So if you can see, we have mentioned a specific illustration for your reference down here. We'll read down all these details so that you are clarified about what details have been mentioned and what is the question asking about. So let's go ahead with it. Mrs. J&J Company was incorporated in the year 2011. The financial year has been considered from Jan to December. When it was incorporated, it already had an asset worth rupees 7 lakhs rupees. Assets were supposed to be depreciated at the rate of 15% on WDV method. The useful life of the asset was considered as 6 years. So this useful life refers to the asset that were procured in the year 2011. That means from 2011, we have to count until 6 years. So 2011, 2012, 2013, 2014, 2015 and 2016. These were the assets. After 1st of Jan 2015, the company or the management proposed change in method of depreciation and that was effective after 1st of January 2016. There were certain assets that were purchased between the tenure of 1st of January 2015 and 1st of January 2016. Between this tenure, there were certain assets that were procured and that has been mentioned here. 1st of April 2015 for 1 lakh and 1st of May 2015 for rupees 2 lakh. So between that tenure, these two assets were procured. On 1st of August 2016, another asset worth rupees 2 lakh was procured in that specific year. It was also observed that all the assets that are procured after 2016 will have, that means any asset that is procured after 1st of Jan 2016 will have a useful life of 10 years, and accordingly SLM method was supposed to be effective from that specific year. So that means 2016 we will have an SLM method instead of WDV method in place. So we have to take that part into consideration and have to see how the change in depreciation is effective here. So let's prepare the timeline and we'll further go ahead with the working notes of each and every asset in detail. Let's figure it out. So we prepared the timeline details here, which includes from 2011, that means the date of incorporation of this company, until 2016. So if you can see, we have mentioned them into columns so that it is easy for you to understand where these details are coming from and what is the effect of it. 2011, we had an asset procurement of 7 lakh rupees. We have assumed that it is from Jan itself and the tenure is 12 months on 15% diminishing value, that means written down value here. Now, from 2012 until 2015, we have to calculate the depreciation on this specific asset for rupees 7 lakhs on WDV method itself. And additional to that, there were two more assets that were procured, one for rupees 1 lakh and the other for rupees 2 lakh, both having a different tenure. One would be having a tenure of 9 months and the other one would be having a tenure of 8 months accordingly. And the same method is supposed to be followed, as in 15% on diminishing value. Now in 2016, the change of method which was proposed in 2015 got effective, and all the assets then were changed to the complete method of straight line method, that is SLM method. Another addition to it was 2 lakh rupees of asset were procured, which is for the tenure of 5 months. That is, it was procured in the month of August, and from August to December it is 5 months, so 5 months depreciation would be provided here. Now in the year 2016, they have procured that asset in the month of August, so that specific asset will be measured on analysis basis, or rather we can say that SLM method, straight line method itself, and the other will be revised to the straight line method policy. So what we have to figure out is what is the difference between them. That means what difference, skipping the asset which was procured on 1st of August 2016, we have to figure out what is the difference if had it been that there was a change in method right from 2011, and what difference would have caused on these assets. So what we'll be doing is that we'll be doing the working according to WTV first, and then after that we'll be changing the method in the year 2016 and seeing the effect of all these assets right from 2011. So let's start with WTV working note first. So if we can figure out, we have made out the transaction details, or rather we can say the depreciation details according to WDV until 2015, post which in 2016 we had a change of method. Now what we'll be doing is that for the same asset, this is only for the first asset that we are doing, we still have other assets lined up, so we'll be doing that later on. However, right now we're just doing the transaction details for this specific asset, which is worth rupees 7 lakh. Now this asset, which was procured in 2011 and after 2016 it was supposed to be changed, so we have procured these details under WDV method. We'll go through the calculation again. The cost is 7 lakh rupees. 15% WDV will give you first year as 1,05,000 as depreciation. So the balance that will be left is 5,95,000. Now, this will be the book value of that specific asset as of 2011. Now, at this book value, there will be certain 15% depreciation reduction that will be done under diminishing value, that means written down value method. That will be 89,250 and that will be subtracted to get the book value of 2012. That is 5,05,750. Now after that there will be another reduction of 75,833 rupees, which will be a depreciation of that specific asset of that specific year for 2013. And you will get a total of 4,29,887 here. Now on this book value again there will be a depreciation of 15% and will have a book value as mentioned below. Now this book value is for the year 2014 and after that again there will be a last deduction of 15% under diminishing value. So the final total that you get here is 3,10,593 rupees. That is the detail that we wanted to check. Now the other detail that we'll be looking after is under straight line method. Now under straight line method we do not have any kind of depreciation rate provided here, but we do have useful life which is mentioned as 6 years. So the scrap value has been termed as 0 because we don't have any scrap value. So we'll find out the depreciation amount with the similar formula, that is cost minus scrap value upon estimated life. So for this asset we'll have a fixed depreciation amount that will be calculated. Let's calculate it. So if we can see, we have a depreciation of 1,16,667 rupees, which is the total depreciation that is supposed to be subtracted. Now this has been figured out by cost, which is 7 lakh, minus scrap value, which is 0, divided by useful life, this is 6 years. So 7 lakh divided by 6 gives you a monthly, or rather an annual depreciation of 1,16,667 rupees that will be subtracted every year until 2015. So let's do that calculation now. So if we can figure out the working which is done for the first asset, which was costing rupees 7 lakh, we have figured out that the differentiation between both of these methods has a massive effect on the written down value. That means the book value of both these assets, the first part under WDV and the second part under SLM method. Under SLM method there is a fixed amount which is getting deducted. Now, that is causing the cost of the asset to come down drastically low, which is almost 50% of that of the one which is supposed to be under WDV method. So if you can see the difference highlighted here, 3,10,593 is the value of the asset under WDV method. Under the same asset or under SLM method, we have 1,16,665 as the written down value or the book value of that specific asset. So if you can see, there is a massive difference between the WDV method depreciation and the change in method of depreciation under SLM method. So now companies who are offering such kind of change, it might be at a certain rate because they want to go ahead with the further reduction of the asset or quick reduction of the asset so that they can plan ahead in terms of new assets bringing up, or the other part would be to show on the profit or loss statement a hyped up depreciation so that they can incur or probably go ahead and match up to the losses that are being handled so that the profit can be neutralized or can be further brought to a equilibrium level. So that is the reason this asset is showing this kind of trend. Let's check the same kind of working for other assets now. We have done a similar calculation for asset number 2 and as asset number 3, which was worth rupees 1 lakh and 2 lakh each. So if you remember, in the timeline we had mentioned that in the year 2015 they had procured two assets, the one between 1st of Jan 2015 until 1st of Jan 2016. One was purchased on 1st of April and the other was purchased on 1st of May. The one purchased in April costed 1 lakh and the one purchased in May costed rupees 2 lakh. Now on this similar basis, 15% under WDV method, because until 2015 also we had the WDV method under functional basis. So 2015 functional basis WDV method, if we calculate using the tenure for 8 months and 9 months, we have depreciations mentioned as below. For the first asset, it is 11,250. For the second asset, it is 20,000. Now that is the depreciation that is charged under WDV method. Now in 2016 we changed the method, so we'll assume that under the same thing we have utilized this kind of asset. Now also, if you understand that all the assets that were procured beyond 2016 had a specific useful life of 10 years, but the one procured earlier had a useful life of 6 years. So we'll calculate depreciation for these assets under SLM method using the same formula, cost minus scrap value upon estimated useful life. Let's use it and figure out what is the depreciation that is charged under SLM method for these assets. We have done the calculation for SLM method as well for both these two assets, and we have figured out the depreciation difference. Now let's see that the depreciation difference that we have observed between the WDV method and the SLM method shows how much is the difference here. Under SLM method, for the same asset which was costing for rupees 1 lakh have been figured out at this point. That means per annum it is 16,000. Now there is a catch in here. 16,000 is for the whole 12 months. We have to further go ahead and analyze the details for 8 months tenure. Hence, I haven't mentioned anything there. So we'll be further going and analyzing these details, because this detail is a total of 12 months and we have to figure out the total for 8 months and 9 months according to both these assets. So for both these depreciations which we have figured out is for 12 months, that means per annum basis. Now we'll go ahead and check the month to month difference, because this depreciation which was calculated under WDV method is for the specific tenure of 8 months and 9 months itself. Similarly, we'll calculate it for SLM method as well. So we have figured out the total calculation tenure wise. That means 8 months tenure, 9 months tenure for both these assets under both these methods. Now the calculation has been also mentioned here. Let me explain it to you. The asset that costed rupees 1 lakh for 6 years, the depreciation will be 16,667. If you further divide it by 12 months, that will give you a certain amount, and if you multiply it by the tenure, that means it has been used for 9 months, you will get this total. 12,500. And the same calculation applies for the next asset as well, which is used for 8 months, and you get a total of 22,222. Now if you see, both these methods have shown again a difference where the SLM price or the SLM depreciation is higher as compared to the WDV method. The straight reason being, the XLM method uses fixed cost and the WDV method uses the reducing balance. So as the balance goes on reducing, the rate of depreciation and the amount of depreciation will also go on reducing. Hence, there is a difference that comes up like this. So this is the same thing that we have to account for, that is a difference which has to be accounted into profit and loss account. Now that we have completed the depreciation for asset 2 and asset 3, we'll further go ahead with the depreciation for the next asset. That means the asset which has been procured in the year 2016. As that asset has been procured in the year 2016, we have a useful life of 10 years on it, and accordingly we'll go ahead with the SLM method because there was no WDV method until then. So let's figure it out. Now this specific is the depreciation that has been calculated for the specific tenure of 2016, the whole year, 20,000. Cost minus scrap value upon estimated useful life. Now this is the per annum depreciation. We have to further go ahead and calculate the depreciation for the tenure it has been used, that is for 5 months. So this is the depreciation that is supposed to be charged for this specific year, and after that the next specific year it will have 20,000 depreciation and all, because it will be used for the useful life of 10 years. So this is how the change in depreciation is supposed to be solved, and this was the advanced problem that we discussed about. So I hope this advanced problem gave you a lot of clarity as to what details are supposed to be solved and how they are supposed to be solved when there is a change in method of depreciation. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.